numbers in October. The company had approved, the board had announced an open market buyback. Size was 9,300 crore rupees at a maximum price of 1850 crore. This was known. What happened on 2nd of December, that's last week, is that the shareholders approved it. And now IIFL saying is typically the buyback starts about 7 to 10 days after the shareholder approval comes through. So perhaps sometime next week we should have the Infosys buyback opening. But separately, we also had a very interesting note coming in from Nomura, where they analyzed some of the usual clients of these IT companies. So they analyzed the numbers of 1,000 out of the top 2,000 global companies. And what they're seeing is that the revenue estimates of these companies are actually deteriorating. So earlier, technology companies, which again are clients of your TCS, Infy, HCL Tech, Wipro, etc., these companies were anticipating a near 10% growth for next year. Now they're only anticipating a 4% growth. Financial clients, they were earlier anticipating a 6% growth for next year. Now in November, when you poll them and ask them, or you ask analysts, what's the kind of growth, say, this large bank is going to have, they're saying that possibly minus 0.4%. So basically, growth estimates of very large companies in the US or globally, top, 1,000 out of the 2,000 are actually deteriorating. Now, tech spends, of which clarity will emerge only in January. Tech spends are linked to revenues of these companies. So if the revenue estimates are actually deteriorating, there is a chance that tech spends itself will come down. So in that sense, Nomura says there are headwinds to growth for the IT industry, and therefore it makes sense to be selective. They like Infy in the large cap space, they like Persistent in the mid cap space, but they have a reduced rating on TCS. But that said, it's always two different opinions which make a market. JP Morgan, as Nimesh had highlighted, actually went and downgraded Persistent, saying that they've had a fantastic run up, and therefore from here on they don't see too many re-rating triggers. So that's the latest that we've got today on the IT sector. Neeraj Diwan, the Director of Quantum Securities, is now with us on the show. Neeraj, would you say the outlook for IT continues to be very headwinded and it's already priced into the stock price, or do you think on the margin, it's actually getting better and therefore this is the right time to invest in IT?
Yeah, good afternoon. Actually, some days back, definitely we could say that the headwinds are priced in. When Infosys was available at 20 times on a forward to 1,400 rupees. The TCS was also at much discount to the current prices. But now, after we've seen a run-up of more than 10-15% from that bottom that we saw, in some cases even 20% with all the mid-cap name, I think then now again you feel that comfort on valuation is not that strong. Looking at some of the concerns which may arise later in the first quarter of next year. So I think now if one has already bought at the low prices, because these are stocks which are very strong businesses, which are very strong growth trajectory, which will happen because of the US demand. But overall, they are in an uptrend as far as the growth is concerned. So if you're already bought at the low prices, you can hold on to them. I think there's no point really chasing across the board, but stock specific, you can still look at companies in the mid-cap IT, which may still have some valuation comfort, and invest in them with a longer term perspective.
Okay, hi Neeraj, good afternoon. Neeraj, what about from the pharma space? That's a sector that's really not got, off the blocks. It's not really moved actually in the last 5.5 years or so, the index itself, but there would be stocks that have been doing their own thing. One of the big value eroders actually has been Strides Pharma. Added on 370 rupees, it's up 6% today. Any view on this one, or from the pharma space, do you like something?
I can give you a view on the pharma space, not on Strides particularly, but in the pharma space, you saw this big growth which came because of COVID, and everyone was chasing pharma stocks, and we saw a good appreciation in the stocks also. One of my favorites in the sector was Divi's Lab. There also we saw a good appreciation. But now, even if you compare, even if you see what Divi's Lab is doing, they're also now going through a transition phase. They are shifting from their COVID portfolio to a regular portfolio where therapeutics and other ingredients are involved. So I think this is maybe the kind of scenario for a lot of the pharma companies. So I think this quarter that have gone 2-3 quarters, and the next couple of quarters can again be that stage where you won't get too much clarity on where the growth is going. But over the longer term, Sun Pharma, which are doing very well, Cipla is doing very well. They, besides the COVID, they already had a very strong portfolio. So they're coming back into that. Growth is also coming. But that appreciation which you saw may not come for some more time. Some more consolidation may happen in the sector as far as the stock price are concerned.
Neeraj, do stay on. Need to slip into a very short break. We're also getting your audio, a bit scratchy, so we'll try and address that as well. Get into a break. We'll come back with more market talk and the market closing as well.
Well, what the outperformance of the Nifty Bank and the support of metals have done is that towards the last few minutes of trade, it's taken the Nifty back into the green, back above that 18,700 mark. For closing, it may close below that 18,700 mark on account of the volume-weighted average price. But for the record books, it is important to know that the last bit will perhaps be above that 18,700 mark. A bunch of stocks actually doing well. We have Hindalco, which has moved to the high point of trade. JSW Steel, the metal stocks have been performing well through the day and now ending at the high point of trade itself. Adani End, the latest entrant on the Nifty too, has moved into the green and moved towards the higher end of today's trading range. Neeraj Diwan is still with us. Neeraj, the last time we spoke, you did indicate that there is still some room for all the IT stocks to perform going forward. Do you still hold on to that view? And to that extent, will you recommend buying here?
Yeah, that's what I mentioned. Though I'm still positive, if someone is already holding on to them, you should hold on for some more gains. But I think as far as the larger sector is concerned, I think you should now be very stock specific and look at opportunities in the mid cap space. There may be some opportunities there, whether it's something like a Mindtree or a LTI. I think there you still have some upside potential. So you can be stock specific even at these levels.
One more question. What about Tata Motors? Now, Tata Motors has great linkages to China. Do you see China demand roaring back, or do you think it'll be a far more gradual climb up to what it was even once the economy opens up? In that question that I'm trying to get at is, should the investors, should traders jump the gun and buy companies which are linked to the Chinese economy and the reopening? Say names like a Tata Motors, for instance.
Yeah, actually, if you take the example of what happened globally and in India also, when the opening up happened, it was actually pretty gradual. There was a lot of pent-up demand which came. So there is a possibility if the way, they are saying about China opening up, then you have to be sure if that really happens. So, that question mark will always be there. So if opening up is really happening in China, I think there can be a lot of pent-up demand which will come in. And Tata Motors, if you see domestically, they've been doing pretty well, whether it's their, passenger vehicles, EV portfolio, their commercial vehicles, they've been doing pretty well. So main concern has been China and UK. So if China is opening up in UK also, maybe the problem they've peaked there. So Tata Motors can be actually a contra-buy at these levels. And because if you compare to other automotive stocks like Mahindra & Mahindra and Maruti, they've not really performed to that extent in the last 6 to 8 months. So that can be one surprise trade there if things are improving in China and UK.
Okay, so you would bet on Tata Motors. The stock has been declining for the last 3 days. Today as well, down close to about 1.5%. Neeraj, thank you very much for sharing your insights, your time with us on CNBC TV 18. As we get into the market close, we'll quickly get you some market opinion.